Ada Akonubi, an investment analyst with the Economic Research Unit at Financial Derivatives Company, joins me now as we continue our focus on commodities. We're talking about oil now. Ada, good morning to you. Thank you so much for coming in.
Good morning, Harry.
So the price of oil has been volatile recently, and we saw it coming in at about $47.18 a barrel. That's the first time we've seen it crossing, that mark. What exactly is happening? It's as if the traders are locking into the April profit.
Well, there has been a combination of factors have led to this recent upsurge in oil prices. Yesterday, from the U.S. Fed meeting, they left interest rate unchanged at 0.25% to 0.5%. Typically, what happens is it causes the dollar depreciates, and there's an inverse relationship between the depreciation of the dollar and increase in commodity prices generally. So most traders took advantage of the lower dollar and bought more oil futures. And then again, the S&P has downgraded ExxonMobil from its AAA ratings to this is no surprise because of the sustained oil prices and because of high reinvestment payments and because of large dividend payments as well. So sustained low oil prices are causing bankruptcies, and the three major rating agencies, Fitch, S&P, and Moody's, has said this is going to actually go on for a really long time, and they expect more of this to happen in the long run. U.S. production is declining. It actually is below 9 million barrels per day. It's about 8.94 million barrels per day. So it's really interesting. So these are the bullish sentiment actually driving oil prices up, and we speak about the OPEC disruption or oil disruption in OPEC countries like Iraq, the militant attacks in its pipelines, and now it seems like investors are saying that the oil in Kurdistan is actually not easy oil to drill because it requires additional techniques such as horizontal drilling, and and it's heavy, so it's less valuable in the international market. Nigeria, on the other hand, are pipelines and pipeline vandalisms, and going forward in June we estimate that general production for Nigeria will be 1.6 million barrels per day, which is not good for Venezuela as well. So this seems like there's now more bullish sentiments. And let's not forget that the World Bank as well has revised.
Yes, they have.
Yeah, they have revised average oil price for 2016 to $41 per barrel from $37 per barrel. So that is, the bullish sentiment driving oil prices up, despite the fact that the U.S. inventories, despite the fact there was a 2 million build-up in U.S. crude inventories to an all-time high. The market isn't really paying attention to that. They're just paying attention to the positives, and it seems like traders are locking into the futures market now because they believe in the very long run oil prices will go up because of the World Bank's revision and because of what is happening as it is right now. So they are buying more oil futures now to take advantage of it in the long run.
But then you wonder how investors would react to this new rating by S&P for ExxonMobil. Do you think that they'll appropriately price, or do you think they'll continue to book profit of this particular equity?
Well, I'm sure investors are not surprised because ExxonMobil is not the only one being downgraded. A lot of other major high-yield oil companies in the U.S. are going bankrupt because of sustained prices, and they can't meet up their obligations. So it's not a surprise for investors.
So what is your market outlook like?
My market outlook is bullish, seeing what we have at the moment. But then the oil market is still very prone to surprises. We might still have massive. Well, Saudi Arabia is looking to ramp up production in a very long run to tap into the increase in demand in 5 years' time. So it's a very interesting market to follow because news from all over, from everywhere drive prices.
You feel that it's an interesting market to follow. Some people feel that each time they're looking at oil prices, they literally hyperventilate.
Yeah.
And it's amazing that some people haven't actually died just by looking at those numbers, but we'll keep our eye on it.
Well, to be perfectly honest, no one really knows the direction of oil prices. You think that from the last meeting in Doha, when they did not reach any production cap freeze, you think prices will go back to $38 or $39 per barrel. But however, it still remained above 40 $40 per barrel. So that's quite interesting. So it's something to, you know, track and look forward to. And
so just maybe, fingers crossed, it might be hitting $50 anytime soon.
Well, fingers crossed, it hopefully hits $50 per barrel very soon. But then, if we bring it out to Nigeria, are we benefiting from high oil prices?
Yeah, because our benchmark is at $38 per barrel.
Yes, but then our production is waning. So if we made our production target of 2.2 as it is for the 2016 budget, which our production obviously is not up to 2 million barrels per day. So if you calculate our production, our benchmark price of 38 times 2.2 million barrels, it comes up to about $83 billion. Then if you take advantage of average oil price as it is now, which is $45 per barrel, and our production of 1.6 million barrels per day, it comes up to about 73 billion. So you see, net, there's actually, we are not benefiting from high international prices as it is. So we need to go back and stop. And it's not surprised that we're having our pipeline vandalisms. That's what happens, social unrest with sustained oil prices, and we are, you know, we depend solely on oil. So if we're not having as much as we used to, we have, you know, whatever is happening, the social unrest in northern Nigeria and the Niger Delta. So it's quite interesting.
Well, other interesting developments, we'll keep tracking that as well. Thank you so much for coming on the program this morning.
Thanks for having me, Harriet.
Ada Konobi is an investment analyst with financial derivatives company